Hey everyone, Money with Yumi here, where I talk about anything and everything related to money, and welcome back to another video. Today we're going to be talking about 5 stocks to buy in 2021 for newbie investors. And I hope this gets you as excited as I am because, I get really excited whenever I'm talking about stocks. And no, I'm not going to ask you to buy BlackBerry, AMC, or GameStop. Do you guys see what happened with GameStop? It went from like $20 to a high of, $400 plus in a matter of 20 plus days, and then it crashed. That's like 20x your money if you invested in GameStop before it went crazy and then sold it at its all-time high. I've been in the stock market for 10 plus years and I've never seen anything like it. It's just freaking insane. It really goes to show you the influence that amateur investors have against these hedge funds because people were just so sick and tired of the manipulation. Am I going to buy these stocks even at its current prices? Probably not. I have to say I got really lucky and 10x my money in just 21 days, which is the quickest by far in my entire history in the stock market. I sold all of my AMC stocks, which I got in for really cheap at about $2 per share before all of this craziness happened, obviously. And then I cashed out when the stock skyrocketed because to me, the price didn't make sense when it got that high, right? So I had to get rid of it. I had to. If I don't, then it would have gone against my principles, right? I would probably buy some AMC stocks if it drops below $4 because I don't think it's going to go back down to $2 again. And I'm okay with that. I'm okay with putting a little bit of money into AMC as a spec play because I feel like people need cinemas. We need a place to go watch the movies and just relax. But what about the other stocks that Wall Street bets were trying to pump up? They don't have what I'm looking for in a long-term value or growth stock. So this video is meant to help you guys who are thinking about getting started in the stock market or those who are relatively new to the stock market, like 3 months, 6 months, or even a year. And let me know what you guys think about these stocks in the comments below. The first one on the list is Amazon, ticker symbol AMZN. It's currently trading on the Nasdaq for $3,000. Now, Amazon is one of the biggest companies in the world with a market cap of $1.5 trillion, with a T. It may seem like it's overpriced right now with a PE ratio of 71, but that's what people have been saying for the past 10 years. And this is one of the few stocks I've been monitoring since I've started in the stock market back in 2011, and the stock price just keeps going up and up and up. And it may be nearing its all-time high right now, but 5, 10, 20 years down the road, this price right now is gonna look cheap, especially if they do a stock split in the future, which they haven't done since 1999. Amazon started out as an e-commerce retailer and they changed the way how everyone shopped. But they're also diversified into several businesses now and they are a freaking conglomerate. Let's see how many companies Amazon owns. There's FBA and third-party sellers on Amazon, Amazon Web Services AWS, which is essentially Amazon's cloud business. They've got Amazon Prime, which is their subscription service, and Twitch, which is a video gaming streaming service, Audible, Kindle, Ring, and IMDb for movies. They also own Whole Foods now, a grocery store which I go to for fresh peanut butter and Italian soda. I can see AWS growing to become one of Amazon's key business segment in the future. And if you're talking about net sales alone, this is the most profitable business of Amazon. More than half of Amazon's net operating income came from AWS. And e-commerce is still the future. We're not at the peak yet. Only 10% of all retail sales are made online. The Coconana, if you know what I mean, already showed us that people loved online shopping. The convenience of buying something at your fingertips and having it delivered straight to your doorstep in less than 2 days without having to step a foot out of the door, and it's the same price. If you went to the store to get it, then why do I have to step out of my house if I can just order online for the same price and have it delivered to my door? So a lot of people are not leaving their homes. Those big box retailers, they're dying slowly and many of them have already shut down during the pandemic, right? RIP to them. But those companies that are still in business are struggling to stay relevant, especially those mom and pop stores. They need to figure out a way to adapt to the world of e-commerce. And big box retailers like Walmart, Best Buy, and Home Depot are doing a great job trying to stay competitive in the e-commerce space. Amazon has been building more warehouses very aggressively in the past few years in different parts of the US just to get closer to its customer and provide better service. If you have seen how big these warehouses are, it's just like huge and massive, okay? And I really like how Amazon is growing, and I expect them to continue to grow to be better, bigger, and stronger, even though Jeff Bezos is stepping down as CEO. And I don't think that's going to matter in the long run because he'll still lead the board of directors, and I'll definitely be picking up more shares if it drops below 3,000. Next up is Facebook, the FB. Most of you guys watching this would probably have an account with either Facebook or Instagram, right? If you don't, I don't know what else to say, but are you living in a rock? So Facebook is not only a social media company, but its core is its advertising business model on both Instagram and Facebook. They also own WhatsApp, which they paid $19 billion for back in 2016. And it is still the most used chat app among Singaporeans, regardless of the privacy issue they were facing. And some people said that they overpaid for WhatsApp, but did they? Essentially, what they're paying for is information and data and the vast number of users that were already using WhatsApp instead of Facebook Messenger. So who is to say how much that is going to be worth? But of course, I'm sure they would have loved to pay a smaller amount. Facebook has 2.6 billion active users a day and 3.3 billion active users a month using one of their 3 apps. That's almost half of the world's population using one of their apps. Facebook earned a total of $11.22 billion in Q4 of 2020 in net income. They were expected to come in with $3.23 earnings per share, but they beat it with $3.88 in actual earnings. That's up 52% from the previous year and 53% growth in net income. Even though they beat the earnings forecast, Facebook stock dropped after earnings were announced, so don't be surprised when that happens. And that is why I wouldn't suggest you to place your bets based on these earnings forecasts. This is one of the safest companies to invest because despite its strong numbers, the stock is trading relatively low, only at a 25 PE ratio and a market cap of $720 billion. This is the only FANG stock that is trading below 30 PE. Amazon, like I mentioned earlier, is at 71, Apple is at 33, Netflix is at 88 PE, and Google is at 34. And I'm sure some of you guys might be wondering, like, would people still use Facebook 10 to 20 years from now? Probably, but more revenue might come from Instagram than Facebook because more young people are using Instagram more than Facebook now. And as more businesses go from offline to online, they will want to advertise to get more reach on their products and services. And guess which one's going to be on their list? Facebook and Instagram are going to be in their marketing plan somewhere. Facebook also bought Oculus, a VR company, and the revenue for Oculus imploded in 2020 as reflected in the other revenue by Facebook. Although it did not specify whether it is from Oculus, it seems likely a huge chunk of the profit is from the sale of this VR tech, especially since most people were cooped up in their home in 2020, right? $885 million in Q4 of 2020 alone. Look at the huge difference from previous quarters. What I like about this stock is that they have over $61 billion in cash or cash-on-cash equivalents, making them one of the strongest companies, especially when you look at their balance sheet. Having this much cash means that they're prepared to invest in other businesses, acquire other companies that will benefit its business, or even buy back shares, which they did in January of 2021. Even with its current prices, I still think that this company is slightly undervalued. The Feds can try to break up Facebook, but it ain't happening, in my personal opinion, because if they do, then they will have to break up Amazon and Google and many other companies. And whenever the stock drops below $250, it is a steal. And if it drops below $200 this year in 2021, I am gonna buy whatever I can. Third on the list is, did you guess it? It's Apple, ticker symbol AAPL. Apple currently has a market cap of over $2.2 trillion, and it is led by Tim Cook, which is one of the world's most brilliant CEOs, in my personal opinion. When Steve Jobs died, people thought that was the end for Apple, that Apple would not succeed without him. Oh boy, they were so wrong. Tim Cook worked at IBM before being recruited by Steve Jobs himself back in 1998. So he's been with the company for quite some time now, and he's the first CEO of any Fortune 500 company to publicly come out as gay. So props to him. He's probably one of the best CEOs out there, and that seems to be reflected in the stock price. Apple has gone through several stock splits throughout the years, and in 2011, when Steve Jobs died, the stock was trading at $13 and now it's above $120. If you bought Apple stock during its IPO days in the 1980s, you would have 1,000x your money. Oh my god. Or if you bought in when the first iPhone came out in 2007, you would have made 26 times your money in 2021. I'm pretty confident that Apple will grow pretty smoothly, not only because they're a strong brand, but because they are an innovative company. And I don't think that they're gonna be the next Nokia or BlackBerry, where they got arrogant and stopped innovating completely, thinking that people would still use their phone, even though there's a new tech out there. Apple is always coming up with new tech products. All the Apple haters out there have been saying that without iPhones, Apple would be nothing. But they forgot that before the iPhones, Apple was already successful with their iMacs, MacBooks, and iPods. I believe they're still an innovative company at the core, and with 5G taking over within the next few years, they're expected to sell a lot more iPhones, iWatches, and iPads this year. They're expected to hit $100 billion in revenue, and 60% of the revenue would be coming from the new iPhones. And don't forget, Apple also has a sector for service. Apple iCloud, Apple Fitness, Apple Arcade, Apple TV, Apple Music, and Apple Pay. And they also own Beats. So it'll be interesting to see how many people who own the iPhone actually sign up for the bundled services that are offered by Apple, called Apple One. And the stock is attractive to me if it's trading around $120, and if it drops below $100, I'll definitely be looking to buy some. Okay, so for the fourth one, I wanted to add a Chinese company because as the Chinese economy gets stronger and stronger, Chinese companies are going to get valued higher and higher. And China is set to surpass US as the world's biggest economy by 2028. And I don't know if that's going to make China the strongest country in the world, but one can deny that they have proven to be a force not to be reckoned with. While the whole world suffered in 2020, China bounced back with really strong numbers. 6.5% growth in just last quarter. And I'm not sure if I can trust the numbers entirely, but from what I'm seeing from my Chinese friends, China is innovating and developing at such a rapid pace, it's actually scary, especially if you compare them with European countries. It's like a robot running a marathon versus a human. That's the difference I'm feeling. So the two Chinese stocks that I recommend is Alibaba and Tencent. With Alibaba and Tencent, you would want to hold long term for like 20 to 30 years. Alibaba, ticker symbol BABA, is currently trading on the New York Stock Exchange at above $230 with a 52-week high of $319. And Tencent stock, TCEHY, is trading on the OTC for $90+ or on the Hong Kong Stock Exchange for 700 Hong Kong dollars. Tencent owns WeChat, which is one of the most sophisticated chat apps in the world, and you can literally do everything in there. You can call for a rideshare, order food, pay your utilities, schedule a haircut, or you can pay your friends through the app. And people don't even use cash or card anymore in China. If the app wasn't Chinese, it would have been the world's most powerful app, no doubt about it. And since you can do everything with one app, all you have to do is to bring your phone out until you lose your phone or your phone dies, then good luck to you. What I like about Tencent is they're part of the gaming, music, and TV business. They are now the owner of Riot Games, which is the creator of League of Legends, and have 40% ownership in Epic Games, which is the developer of the game Fortnite. And Tencent Video is kind of like the Netflix of China with a lot of original dramas, variety shows, and short films. They are also in the movie business. They have produced several Hollywood films like Venom, Wonder Woman, and the upcoming Top Gun movie. And with Alibaba, you are getting a piece of that e-commerce pie. E-commerce is a lot bigger in China than anywhere else in the world, and with Alibaba, you can expect it to grow bigger as businesses around the world who are looking for cheaper suppliers are going to look at Alibaba first. And that's how I found my factories to manufacture the products I have developed and conceptualized. And if you have heard of Tmall or Taobao, Alibaba now owns them. Alibaba is not only an e-commerce company, but they are also a venture capital firm, a fintech, a cloud company, and an entertainment company. They have invested in several Hollywood films like the recent Mission Impossible movies, TMNT, Gemini Man, and Star Trek. Both of these companies were the first two Asian companies to break that $500 billion valuation mark in the US, and both companies are diversified, so as the company grow, they will have more money to acquire other businesses, and that usually translates to a higher stock price as they get more revenue streams from different businesses. So you can choose to buy one or the other, or buy both. Okay, so I saved this for the last one. Did you guys see it coming? Tesla is a monstrous company. And even though it's trading at a crazy PE ratio of 1,000 plus with a stock price of over $600, this sky-high price is gonna look cheap like 10 to 20 years from now, just like how Amazon was many years ago. And during the past 10 years, the highest PE ratio for Amazon was as high as 3,600. And that's the problem with growth stocks. It's just so hard to come up with a fair valuation for them because a lot of expectations are already factored into the price. Let's take a look at EPS last year. It was at 0.23 and it's expected to do roughly 3 times better at 0.97 this quarter and 1.17 in the next quarter. So Tesla is expected to perform very well this year despite falling short of their quarterly estimates just recently. They missed on earnings but beat on revenue. And let's not forget that Tesla had its best year yet in 2020. The stock skyrocketed by 740% in 2020 alone when the world was suffering from the pandemic, Coconana, and not buying cars, and yet Tesla still managed to beat their record for auto sales and manufacturing operations. And I really do think that Tesla will grow into a bigger company in the next 10 to 20 years when people start shifting from traditional fuel cars to EVs. Apart from EV car sales, another sector to look out for is their solar business. When more people shift towards electric cars and realize how much more electricity they're going to need and will save in the long run if they convert to solar, we're going to be seeing a lot more houses around the world installing Tesla solar panels. Especially when you get a $1,500 rebate on the Tesla Model 3 if you purchase a solar system from Tesla. I call it the triple win. You're not spending money on gas or petrol, and you're not paying as much for your electricity because you're using solar, and in turn, you're saving the earth. So these are my 5 best buys for people who are just starting out in the stock market, because all you have to do is just buy when it dips and then hold. Now, there is a very low probability that any of these 5 stocks would fall 50% 5 to 10 years from now. And I consider these 5 stocks extremely safe plays, and I could possibly see myself holding these 5 stocks for a very long time, maybe even forever, just like Warren Buffett and his Coca-Cola stock. He's still holding them to this very day. Now, I'm pretty sure they're paying him a very sweet dividend with the amount of shares he's holding. So how do you buy and sell stocks? You will have to buy it through a trading platform or a brokerage firm, and there are a million different brokerage firms out there depending on what country you're in. But if you're in Singapore, I would suggest you to use TD Ameritrade. They are the best options for US market because they don't charge you any commission. That means it's free every time you buy or sell a stock. They do currently have a long wait, and from what I'm seeing from Google reviews, their customer service is non-existent. So be prepared for that. If you don't have the patience to wait for TD Ameritrade, contact your local bank to see if they have a brokerage service and then compare the commission fee for buying and selling with other brokerage firms. DBS, OCBC, and UOB have their own brokerage accounts, but they do charge a commission fee every time you buy and sell a stock. For example, UOB charges a minimum of 0.275% per trade up to $50,000 with a minimum trading fee of $25. So if you're buying one stock of Apple at $140 and you have to pay $25, technically you're paying $165 for one share of Apple. And then you will need the stock to go up to $190 in order to break even, because then you have to pay another $25 when you sell the stock. And a lot of people who are just starting out in the stock market oftentimes forget to factor in these fees when they buy a stock. So it's just something to take note of when you're considering buying stocks. I hope you guys found value in this video. If you did, please give me a thumbs up by destroying the like button. It will really help with the YouTube algorithm. And don't forget to subscribe to my channel and ring the bell icon so you get notified whenever I post a new video. And of course, feel free to follow me on my Instagram. Thank you guys so much for watching. Really appreciate it. Have a great day. I'll see you again next time.